This is Las Vegas Real Estate Now with local real estate expert Harvey Blankfeld.
Where we want to educate you about our market, empower you to make wise decisions, and help you engage with our expert contributors. And now we're going to talk to Jeffrey Edwards from Piercy Bowler Taylor & Kearns. Jeff, you know, this time of year, we're coming into that last quarter of the year.
Right.
We got to start thinking about what that tax bill is going to look like.
Last year,
Yep.
if you got a tax refund, this year you're probably going to get a tax refund.
Okay.
If you're a W-2 employee, all things the
Nothing
same.
much has changed this year.
Nothing much has changed. And with the new tax law, the standard deduction doubled.
Right.
And so most of us really only qualify for the standard deduction. So
Right.
it's same as last year, Sally.
Pretty simple.
And so if you got a tax refund for 2018, most likely you're going to get a tax refund for 2019. This is the time of year when you need to really look at what your withholdings are, do a little tax calculation, see if you're in the ballpark of where you were last year,
Right.
and why let the IRS hold on to that money?
Okay.
Adjust your withholding so that money comes into your pocket. Freeze it up for the last quarter. Of course, we have the holiday season coming on, and
Yeah.
and you're going to
Maybe you want a little extra cash now. Like you said, instead of using a credit card,
use your cash.
use your cash.
Or put it in your savings account as opposed to the interest-free that the IRS is going to get.
A lot of times when I'm hiring a new person and we're going through and they're filling out their forms to decide what type of withholding they want, they get confused. And one of the things I always like to say to them, and correct me where I'm wrong, is this does not determine how much tax you pay. This determines how much money you have set aside to pay the tax.
Correct.
Okay, so when we're talking about withholding, we're talking about basically the government is holding onto some money for you to cover your tax bill so you won't have to write a big check at the end of the year.
Exactly.
That's what they're trying to do. Okay, so when we say adjust your withholding, if, let's say, for instance, last year you ended up paying taxes. Say last year you had to write a check for $800.
And nothing's changed.
And nothing's changed.
You probably need to bump up and
There
have
you
more
go.
withheld.
All right, so add another $20 a week or so to the withholding.
Just to compensate.
Just to make sure
So
you
you
don't have to
don't-
write that check.
Yeah, or get blindsided with a big check.
But I also want to talk a little bit about retirement accounts. So we need to look at that now too.
That's why I put those two together.
Right.
So if you're withholding, and you can adjust your withholding so you've got more disposable income now because you
Right.
paid in enough going into quarter number 4. Why not take that you don't even know about and contribute it to your 401k? You haven't seen the income, you haven't seen the money in your pocket, and now you're going to get it thrown into your 401k and get an extra tax deduction because of your 401k contribution is tax deferred.
Rental properties. Okay, so again, this time of year we got to evaluate maybe where we are with our rental properties in terms of how to handle depreciation on that.
Okay, one of my favorite investments is real estate. With a rental property, you buy a rental property for $100,000, and I'm just making up numbers here.
Right.
And you've got carrying costs of that rental property, the normal maintenance, property taxes, utilities, on and on and on. So you deduct that from the rents, and then if you've got a loan on it, you deduct the interest, of course, because this home is now a business,
Right.
and any cost that goes into that home is a deductible expense. But on top of it, you get a bonus expense for depreciation, and that's an expense that you don't have to come out of pocket to pay for.
Right.
You take a $100,000 property and you divide it by 27 and a half years, and that's the amount of depreciation you get every year. And so if you have a positive cash flow property and then you add the depreciation on it, you could end up with a paper loss but positive cash flow. And there again, you've got some free money.
This has been Las Vegas Real Estate Now. Thanks for listening, and remember to tune in every Saturday at 11 a.m. on 101.5 FM, 720 AM KDWN.